But now, time now to welcome our market guest. We have Dipan Mehta, member BSE and NSE, joining in. Dipan, hi, good to see you in this Monday. It's still weak for the markets after that over 3% fall last week as well. What's your sense? What's plaguing the markets right now, and what's the next big trigger that we need to be closely watching for?
So I think there's no fresh negative news flow. I think traders are still dealing with the RBI policy and the statements made by the governor that no further interest rate cuts for the time being unless he sees inflation really coming off significantly. And the sense we are getting is that these kind of interest rates of 7.25% repo and then just about 8% or thereabout the GSEC, that's going to be the interest rate going forward for some time, for the next few months or so. And that's a bit of a dampener because we were all expecting a further interest rate cut to give a boost to the economy, but that particular assumption or scenario is out of the window. So that's one aspect. And secondly, I think the monsoon fears still linger. And while there is, one Skymet saying that it will be normal, but the IMD is predicting a failure of the monsoon. So there's a bit of confusion over there as well as to who to believe. So I think these are the two major aspects which traders are dealing with, and as such also going forward there are no real positive triggers unless the monsoon session starts and we have some action on the GST over there.
Okay, Dipan, good morning, thanks for joining in. What do you do with Sun TV now?
Thanks for having me. Well, Sun and Nestle both are very difficult questions to ask, and we've been in this situation where there's a regulatory issue and the stock just drops like a rock. Sun, Nestle for different reasons. In the pharma sector, we have seen it happening to Wockhardt and Ipca in the past. And if you go by recent memory, whenever there is a regulatory overhang, generally the stock it doesn't come out of it for a long period. And using that experience in mind, I would like to kind of avoid both these companies, not do any kind of bottom fishing. And as investors, I think they are stuck because there has been a huge fall in their value of holdings, and you are in a bit of a dilemma whether to sell off after seeing such a huge decline in the stock price or to hold on. But my sense is that these stocks are not going to go anywhere over the next few months or so, and there could be a market recovery over the next few months, and the opportunity cost will be lost unless they switch out of these stocks where there is a regulatory overhang.
Okay. Actually, what is happening with Adani Enterprises, Dipan? Is it still adjusting to the scheme of arrangement? I mean, it's already fallen to 100.
Well, unfortunately, I don't track that group at all or what went wrong over there, so I just wouldn't like to comment. But I do know that some action is taking place as far as the regulator, exchanges and the investors and brokers involved. I think something is brewing on that front, and we should have some kind of feedback or report coming from there.
Okay. Dipan, Bank of Baroda and PNB are now trading sub 1 times price to book value when you look at it on an FY16 basis. Both of them are down close to 30% or over 30% YTD. How much more pain do you expect for both these nifty PSU banks?
So I think both these companies reported further deterioration in their NPAs, and while we do feel that for some banks there seems to be light at the end of the tunnel as far as this problem is concerned, for both these banks one cannot conclusively state that the worst is over, which is why I think investors are liquidating or going underweight in specifically these two banks. So that is one aspect specifically to these two counters. But other than that, I think with the RBI policy, one does need to get a bit cautious as far as the entire banking sector is concerned, because they are the most interest rate sensitive sector, and with interest rates being as they are and with expectations of a further cut diminishing with every day and every RBI policy, then where the trigger going to come for the banking sector, and the problems will remain, that being slow growth in credit, lingering NPA problems, and base effect also will start catching up for a lot of these banks. So I would say that one needs to get neutral to slightly underweight in banks, and do keep in mind that a lot of investors are overweight in the banks, especially private sector banks, and that's a bit of a trouble spot.
Yeah, clearly it is the big borrowers and the big lenders who have been falling ever since the credit policy. We have seen all those debt-laden stocks continuing to, even today you have got a goodish bit of fall in most of the infra pack and of course into the infra lenders. Dipan, is Coal India now sufficiently discounting the good news, or has it more to go?
See, typically our view on PSU is extremely negative, and as far as Coal India is concerned, it's no different. We look for rallies like this to exit out of the stock if anybody is still holding it, and unless we see massive reforms taking place on the PSU side, I think PSUs by and large will continue to disappoint the market. You will have one odd quarter or so doing well, but these are not, secular growth stories which will give compounding returns to investors. And as and when these companies start doing better, the government may look at ways and means of trying to see how they can be used for the better good of the public at large at the expense of the minority shareholders. So that risk always remains in the PSUs, especially someone like Coal India, which has a monopoly position and is in a very sensitive sector like coal, where there are a lot of push and pulls. So I would say that these are not stocks, oil marketing companies included. These are not stocks for investors, to have as core holdings. You could keep on trading in them depending upon the news flow and whether they are the flavor of the season or not. But you cannot be holding huge chunks of these in your portfolio and hope to outperform the market or at least have decent returns on your equity investments.
Okay, fair enough, Dipan. Any disclosures?
Well, we spoke about a lot of companies and I gave my views, and I would say that our trading strategies and investments and recommendations are more or less in line with the views which I have expressed.
All right, Dipan, we leave it on that note. Thanks very much for joining in.